Good morning, guys. I have to apologize for the noise outside. It's just that I'm pressed for time and I have to record this right now. It says here, Riley Bike Manufacturers produces racing bikes that they sell to various retailers at a markup of 50%. Their financial year end is the 28th of February each year. So basically, we know as to which financial year we're working with. So it is the 28th of February each year. Okay. And then they said, the required is that we need to use the information below in order for us to prepare the production cost statement and all the relevant notes. Now, I'm going to start with the notes first, okay? Now, information says the following information, actually, the following balances appeared in the books on the 1st of March 20.7. For raw materials stock, we have 80,000. For work in progress, we have 40,000. Note that these are the balances. They are opening balances, meaning that they are balances at the beginning of the year. So these are balances at the beginning of the year. These are balances at the beginning of the year. So for raw materials, we have 80,000. Those will normally go to direct material cost. And for labor, for work in progress, we've got 40,000 rand that will go to your production cost statement. Okay, the 40,000 rand will go to your production cost statement. All right, let's read the information that follows. Before I actually even read the information that follows, let me go straight to my direct material cost and my direct material cost note. Simply starts with the balance at the beginning of the year. In this case, the balance at the beginning of the year will be the amount that I just told you now, which will simply be 80,000 rand. That work in progress, I did say that it'll go to your production cost statement. I'm going to quickly go to my production cost statement, and this is my production cost statement. My production cost statement, as you know, it starts with direct material cost, of which given, and then it'll have direct labor. Okay, because it just shows me answers and I don't want answers right now. I was hoping that it started with what I needed. In this case, I just wanted that work in progress balance. Right now, moving right along, let's go to the next slide. It says in the next slide that raw materials amounting to 200,000 rand were bought on credit. And we also bought raw materials amounting to 60,000 rand for cash. Now, purchases of raw materials will go to the direct material cost note. So I'll go straight to my direct material cost note. And this is my direct material cost note. I'll have purchases. You normally have cash purchases plus credit purchases, you minus the returns. In this case, I have cash purchases plus credit purchases. There were no returns specified. Therefore, I'll have 260,000 rand as my purchases. Going back to the information, it says, carriage on raw materials paid by check amounted to 30,000. So that 30,000 will be carriage on raw materials, and carriage on raw materials will also go to the raw materials note. And I will simply put it there as carriage inwards. So my carriage inwards in the raw materials note will be 30,000. Be careful as to what carriage on raw materials you need to include on the raw materials note. Note that this is transportation that was paid, transport cost paid to bring the raw materials to the business. So in that case, obviously, it's carriage inwards. But if we spoke about carriage on sales, that will be recorded in sales and distribution, and it will not be recorded under a direct material cost note. And then number 4 says consumable stores bought for cash amounted to 24,000. So consumable stores qualify to be indirect. These are indirect material. Okay, these are indirect material. And indirect material, as you know, it'll simply be recorded in factory overhead. So that will go straight to factory overhead. And remember the formula for calculating indirect material. It's simply opening balance plus purchases, and then you minus the returns and you minus the closing stock. It'll be returns of raw materials. So I'll go straight to it, and I wrote it here as consumable stores on hand. It'll simply be 24,000 rand. What is this 6,000 rand? Okay, we'll get to it later on. 24,000 rand is simply purchases of raw material. There was no opening balance of indirect material. Therefore, because there was no opening balance of indirect material, there was nothing at the beginning. Okay. And then we're going to have salaries and wages paid. They amounted to 210,000. They said 100,000 of this was for direct labor. The ones for direct labor will be the ones that will be recorded under direct labor. And then they said 60,000 was for indirect labor. Anything that is indirect material, indirect labor will be recorded under factory overheads. Therefore, I will simply take the 100,000 and put it under direct material. So when I go to direct materials, actually it's not direct materials, it is direct labor. Apologies for that. So it will be recorded under direct labor as direct wages, which is simply the 210,000 minus 110,000, and it will give you 100,000. Remember, this was 100,000 that was paid for direct labor, and the 60,000 rand that I spoke about, which was indirect labor, it will be recorded in the factory overheads account. In this case, it will simply be indirect labor or salaries and wages, which will be 60,000. So you can record it as indirect labor or salaries and wages. It is totally up to you. Remember, indirect labor are those workers who are not directly involved in making the product, but they do contribute to making the product, like you. Factory supervisor, it can be factory foreman, it can be security at the factory, it can be the cleaner at the factory. All those people, they work at the factory, but they're not directly involved in making the product. They're considered to be indirect labor or simply salaries and wages, and it will be recorded under factory overheads. Okay, moving right along, let's go to point 6. Point 6 simply says that depreciation written off during the year amounted to 26,000. This was on factory equipment, which is 16,000, office equipment 3,000, sales vehicles, which is 7,000. Please note that the one that will go to factory overheads, depreciation automatically is not directly involved in making the product. But because this is depreciation that relates to the factory equipment, that 16,000 will be recorded in the factory overheads note. So let's go to factory overheads note. We're going to have depreciation of factory equipment, which will be 16,000. Depreciation of office equipment will be recorded in the administration administration note, and obviously administration note in this activity. I did not ask you to prepare the administration note. However, just to show you what I was talking about, we're going to have depreciation on admin, which is office equipment. It will be 3,000. The other amount, which was depreciation of vehicles that were used for distribution, that will be recorded under distributions, and therefore under distributions here we're going to have depreciation of delivery vehicle, which will be 7,000. Going back to the information, it says here, rent amounting to 200,000 was paid during the year. This amount must be divided in the ratio of 3:1:1. Now, when you calculate how much will go to different departments, you will simply take the ratio, which is 3 plus 1, and add it with the other one to get the total ratio, which will be 5. Note that for the factory, only 3 or 5 will go to the factory. Then you're going to take the total cost of 200,000 Rand, and you will simply multiply that by 3/5 to determine how much will go to the factory. And in this case, when you calculate that, 200,000 multiplied by 3/5, and you multiply that by actually we multiplied by 3/5. Let's check how much will that give us. 200,000. Now in this case, our rent that will go to to the factory will simply be 120,000. So if you want rent that goes to admin, they said admin will be for office. You will simply take the same 200,000, but in this case, you will simply multiply it by 1/5, and it will give you the amount that goes to admin. In this case, let's check how much will go to admin. So the amount that will go to admin will simply be 40,000. Okay, this does not make sense. I have to recalculate how much went to the factory. Oh, it's 120,000. All right. So because admin, it's simply 1/5, and they also told you that sales will still be the same amount, which is 1/5. So how do we record this? The 120 for the factory will simply go to factory overheads as rent expense. Now let's go to our factory overheads. We're going to record it there as rent expense. So you will simply have to show these calculations in brackets because you get marks for it. So rent, factory rent will simply be 120. Let's check how much will go to admin. Admin will simply be, in this case, we're going to take the same amount, which is 200,000 multiplied by 1/5, it will give us 40,000. And the same amount will go to selling and distribution, which is sales and distribution. So for sales and distribution, we'll simply have, okay, now it shows you sundries. For rent, it will simply be 40,000. Okay, moving to the information again, let's read further. It says in number 7, other expenses. For electricity, they gave it to you that it's 120. That goes to the factory. 8,000 goes to office, which is admin, and the other 8,000 will go to sales. So we're gonna go straight to our factory overheads, and in our factory overheads, we'll simply put in as other expenses. In this case, it will be water and electricity. Let's go quickly to our factory overheads. Factory overheads, we will have electricity, and the electricity amount was given to us, which is 120. And for admin, it will simply be 8,000, and for selling and distribution, it will also be 8,000. Moving right along. Then they said sundry expenses amount to 25,000, but 80% of those sundry expenses will go to the factory, 5% will go to office, and the other 15% will simply go to the sales department. Now, how do we record that? You will simply take the 25,000 rand and multiply it by 80%. So 80% of this will go to the factory, and because it's sundry expenses that relate to the factory, it qualifies to be indirect, and therefore it will be recorded under factory overheads. Now let's take 25,000 and you multiply that by 80%, it will simply give you 20,000, and then you will simply take the same 25,000, you multiply it by you multiply it by 5%, and 5% will simply go to administration. So what is 5% of 80,000? 5% of 25,000, apologies for that, 5% of 25,000 will simply give us 1,215, all right? And how much will go to sales? Sales, it will simply take the same amount, which is 25,000. You will simply multiply it by 15%, and you will get sundry expense that goes to sales and distribution. So 25,000, you multiply that by 15%, it will simply give us 3,750. So 3,750 will simply go to sales department. Now, how do we record this? You're going to go to our factory overheads, and our factory overheads will simply have sundry expenses, which is just 80,000 times 80%, that means 25, thousand times 80%. And that will give us our total factory overheads, which is 354,000. Okay. And then let's go to our sales and distribution. In our sales and distribution, it has already been recorded, which is 3,750. And when you go to admin will be that 1,250. So we're going to have admin will be 1,250. They said commission of 84,000 was paid to salesperson. Now they said it's commission paid to salesperson. That will go directly to selling and distribution. Let's go to selling and distribution. So you will record it there as commission. So under sales and distribution, you have commission on sales of 84,000. Things like commission on sales, bad debts will be recorded under sales and distribution. You cannot record them anywhere else because those are the costs that are incurred due to selling. All righty. And then the last one simply said raw materials issued to manufacturing process. Now I will highlight that because they're telling you what that raw material, what type of raw materials we're dealing with here. These are raw materials that left the raw materials warehouse and the way issued to production, meaning that they'll be part of production. Obviously, those will be recorded in note number 1, which is your direct material cost. Now, note that what they're giving you here is simply what we normally calculate. So you have balance at the beginning of the year. You're going to add your purchases and add your coverage inwards. And normally we minus our balance of raw materials at the end of the year. But in this case, we didn't have any raw materials at the end of the year. I'm going to quickly go to our information and realize that they gave it to us as a question mark. So we didn't have raw materials at the end of the year, but they told us how much raw materials were issued to production. So here we're simply looking at raw materials that were taken out of the warehouse, raw materials warehouse, and they were taken directly to production, which we refer to as raw material cost. Okay, raw materials that were issued to production, we refer to them as raw material cost. They're no longer part of the raw materials in the warehouse. They are issued to production. Therefore, we're going to take it. So these are the ones that are issued to production. This value was given to us as 350,000. Okay, so we're going to put it there as 350,000. But normally to get this value, we normally subtract, we normally take our total cost and then we minus raw materials at the end of the year, which we didn't have. So question is, how do we work out raw materials at the end of the year? You will simply take the 330 and then you minus that 370,000. It will give us raw materials at the end of the year, which will be 40,000. This 330,000 together with the total of factory overheads, which is 354,000, plus the direct labor. In this case, our direct labor, we don't have any skills development labor. We don't have an employment insurance fund contributions. So any contributions are not included. So that 100,000 will also go straight to our production cost statement. If you remember very well, our production cost statement will start with direct materials. You're going to add that, which comes from note number 1 I just showed you, and you're going to add it with direct labor. The two form what we refer to as primary costs. So we're going to add them together to get prime cost. When you add factory overheads I just showed you now, which is 354, you will get what we refer to as TMC, or your total production cost. In this case, your total production cost will be 784,000, which is 430,000 plus 354,000. It will simply give you this 784,000. And then we're going to add work in progress at the beginning of the year that I did show you to you guys at the beginning of these slides, which of 40,000, which was the balance of work in progress at the beginning of the year. These are unfinished goods from last year. So this year we're going to start by first finishing them before we can actually move on. Once we have finished them, so basically our total production now will simply be 824,000. But all of this production, not all of them were done. So not all of them were finished goods. So we're gonna minus the ones that were not finished, which is work in progress at the end of the year, 44,000. This 44,000 was given as balances, as part of the balances at the end of the year. And it was given to you right here at the bottom. They gave it to you work in progress at the end of the year of 44,000. These are unfinished goods at the end of this year. So they will not form part of finished goods. That's why we need to subtract them in order for us to get the cost price of finished goods in the current manufacturing year, in the current financial period. So in total, our finished goods for this year will simply be 780,000. I'm going to stop here for now. Later on, we will do what we refer to as the short income statement. This activity only required you to prepare the production cost statement.